Today we're going to be looking here at Starbucks, ticker symbol SBUX. They just had their earnings. They're a little bit of a miss. Earnings per share 90 cents adjusted versus 93 cents expected. That puts us at about 3.60 for EPS over the next year. Revenue was at 9.43 billion. It was expected at 9.59 billion. They did report a net income of 1.2 billion or 90 cents per share, up from 855 million year over year, or 74%, 74 cents per share a year earlier. So it did, get better. They just didn't hit estimates. This is excluding restructuring costs and other items. Starbucks earned 90 cents per share. Net sales rose 8% to 9.43 billion. Global same store sales increased 5%, falling short of the street count estimates of 7.2. In North America, same store sales also rose 5%. So, Starbucks isn't doing horrible. They just missed estimates, just a little bit of a tailwinds because, things are slowing down in America and things are definitely slowing down in China where they're really trying to grow. As you can see here, China as a company is the second largest market, reported same store sales growth of 10%, so that's good, 10%. The average ticket at Chinese stores fell 9%. They're more cautious. Well, yeah, we know our environment's really bad. But for the fiscal year 2024, the company now anticipates revenue growth of 7 to 10%, down from its prior forecast of 10% to 12%. Starbucks also lowered its global same store sales outlook to a 4% to 6% from its previous range of 5 to 7%. But the company reiterated its full year forecast of earnings per share growth of 15 to 20%. So, we follow Starbucks. We're not invested in them right now. We've been trying to get a good price. So we are going to be conservative with our estimates here, but we are going to use the 10% growth rate, 8.5% discount rate due to the environment that we're in. We're not going to use 10% for a company like Starbucks that trades usually over a PE of 25. We would like to see that ratio PE down to about 20. But anyways, outstanding shares 1142. We come to a discounted cash flow price of $80.85. They are dividend paying stock. It's growing it's growing over 7%. It's growing at 10% over the last 5 years. So we're going to estimate a growth rate of 7% going forward. Give ourselves a discount rate of 10% due to the uncertainty if Starbucks is going to continue a 10% growth rate going forward. So we do want to make sure that we don't overpay for this stock. So at a 7% growth rate, 10% discount rate, we come to $81.32. As you can see here on the Benjamin Graham, 3.6 EPS with a 10% growth rate. For PE of 20, it would come to 118.80. So our final valuation here, if you just put them all together, comes to $93. We'd want to give ourselves at least 10 to 15%. So Starbucks really right now isn't in this buy range. As we have seen before, though, that Starbucks has dropped into the 70s within the last 2 years. So hopefully we can get ourselves, a good price on Starbucks going forward. But yeah, that was just a quick review of their earnings and what their calculations looking like going forward. Thank you.